since we established the Federal Reserve, the price of gold has gone from $20 to $2,700, almost $2,800 was the high. If you just assume a similar move from here, that takes gold to over 360,000. I think the rate of currency debasement has accelerated dramatically. When this millennia started in 2001, gold was still under 300. And here we are, 20 odd years into it, 23 years, 24 years into it. And, we're 2,700. So gold's rise, I think, is accelerating. And I think it's going to continue to accelerate. But ultimately, I do think that we return to a gold standard because that's the only standard that works.
Gold prices hover near $2,650 early Wednesday, lacking strong bullish momentum ahead of the Federal Reserve's meeting. The Fed is expected to maintain rates, while better-than-expected November retail sales failed to boost the U.S. dollar significantly, keeping markets cautious. Gold's remarkable performance in 2024, with prices climbing over 30% year-to-date, reflects its best annual gain in a decade. According to the World Gold Council, this surge was primarily driven by robust central bank purchases and increased investor demand, which offset a slowdown in consumer buying. By the third quarter of 2024, central banks had purchased 694 tons of gold, far surpassing levels seen in 2022. However, analysts caution that this stellar rally may not extend through 2025, citing potential economic and geopolitical headwinds. PeterSchiff, a prominent advocate for precious metals, remains optimistic about gold's long-term potential. He highlights that gold's price has no ceiling due to the steady devaluation of the U.S. dollar. Since the Federal Reserve's inception, gold has risen from $20 per ounce to nearly $2,800. Schiff suggests that if current trends continue, gold could climb to unprecedented levels, potentially exceeding $360,000 per ounce, as accelerating currency devaluation unfolds. Furthermore, Schiff argues that if the U.S. dollar collapses due to runaway inflation, alternative fiat currencies like the euro or yen will fail to provide stability. In such a scenario, he believes smaller nations may peg their currencies to stronger ones, but the ultimate solution would likely be a return to a gold-backed monetary system. As gold prices hold steady ahead of the Fed meeting, market participants closely monitor central bank actions, investor sentiment, and economic data to determine whether the metal's 2024 momentum can sustain or face challenges in the coming years. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
In 1789, with the first Coinage Act, the Constitution ratified, gold was $20 an ounce. And when they created the Federal Reserve in 1913, it was still $20 an ounce. We had no inflation during that time period. In fact, we had falling prices for well over 100 years. We had the Industrial Revolution. We absorbed millions and millions of immigrants into this country under a gold standard. And, we built the strongest economy in the history of the world with a gold standard. So to say that the gold standard didn't work is pure nonsense. I mean, it's worked better than anything we've tried since. You say how high can gold go? I mean, there's no ceiling on gold because there's no floor on the dollar. Since we established the Federal Reserve, the price of gold has gone from $20 to $2,700, almost $2,800 was the high. If you just assume a similar move from here, that takes gold to over $360,000 an ounce. So how long will it take to get there? It just depends on how much quicker we debase the currency. But I think the rate of currency debasement has accelerated dramatically. When this millennia started in 2001, gold was still under 300. And here we are, 20 odd years into it, 23 years, 24 years into it. And, we're 2,700. So gold's rise, I think, is accelerating. And I think it's going to continue to accelerate. But ultimately, I do think that we return to a gold standard because that's the only standard that works. And I think that if the dollar fails, which ultimately it will, I don't see how you just replace it with another fiat currency. I mean, I can see how, you have some of these smaller countries and their fiat currencies collapse and they get wiped out and they dollarize or they peg a new currency to the dollar. Okay, because, we still have some, fiats that are working. But if the king of fiat, if the primary reserve currency collapses, we have runaway inflation, then what do? You tell people, well, just take the euro. It's better. Take the yen. I mean, none of these currencies, are viable as, so the only thing that makes sense is real money. And so ultimately, that's where we're going to go. We're going to head back to that. I just don't know exactly the timetable or the path that we get there, but I'm pretty sure that's where we end up.
Silver struggles to maintain momentum after Tuesday's modest rebound from the monthly low near the $30 psychological level. During Wednesday's European session, the metal remains under pressure, trading just below the mid-30s and down nearly 0.30%. From a technical standpoint, silver recently failed to breach the $32.35 horizontal resistance and slid back below the 100-day simple moving average. This technical breakdown aligns with daily chart oscillators that remain in negative territory without nearing oversold conditions, signaling that the path of least resistance remains to the downside. Despite this bearish sentiment, long-term analysts like PeterSchiff highlight silver's potential upside. Schiff attributes silver's undervaluation to the lack of central bank interest and limited public demand, dubbing it poor man's gold. However, he points to silver's historical outperformance during bull markets, such as its 2011 peak of $50, as evidence of its potential for significant gains. While short-term technicals suggest further downside pressure, silver's long-term appeal remains intact for investors betting on its eventual resurgence, particularly when market conditions shift. For now, traders should closely monitor key support and resistance levels to gauge the metal's next move. Let's get back to the interview.
I mean, I don't think it's manipulation. I think the problem that silver's had is the central banks aren't buying it. It's not the type of metal that they want to store. It's the people's gold, right? Poor man's gold. And so since the public isn't buying gold or silver, and the central banks are buying gold, that kind of leaves silver, without a lot of buying interest. And so I think that's why it's cheap. But that's also a good opportunity, because when the public returns to the silver market, the prices are going to go much higher. And so, and if you look back historically, there's never really been a bull market in gold that silver hasn't, done better. Now that it's been a while since that's been true, but silver outperformed gold in the big run up till 2011 when it got up to $50, and now it's at $30, and gold's at 2,700. So silver is very cheap in terms of gold, and over time you would expect it to be a lot less cheap. Whether it gets expensive again, we'll see. I mean, it's possible that silver can get to the point where it's expensive with gold, but you'll make a lot of money if it just reverts to the mean. It doesn't have to become expensive, just kind of fairly valued based on the historic relationships between the metals that go back for a long ways. I mean, this is just not new data. You can go back a long time, look at gold versus silver.
As gold and silver navigate a complex economic landscape, their trajectories remain influenced by central bank policies, market sentiment, and broader geopolitical factors. While gold has demonstrated impressive gains in 2024, the path forward may face hurdles. Similarly, silver, often considered an undervalued alternative, holds long-term potential despite short-term bearish pressures. These dynamics highlight the evolving nature of the precious metals market and the opportunities it presents for investors. How do you think shifting economic and geopolitical trends will shape the future of gold and silver prices? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.